Hello and welcome to another segment of Frame and CPA, where your success means our success. Today, guys, I just want to quickly talk to you about what does it mean that $80 billion to the IRS, which is the new addition that came out of the Inflation Reduction Act that invests in $80 billion in the IRS over the next 10 years. Well, typically what happens is the IRS just is greatly understaffed. It's completely unable to process a lot of the information that's being submitted, and COVID didn't help. It set them back probably ages. So it makes sense that the Inflation Reduction Act is going to invest into the IRS pretty much, a huge amount of money. And what they're trying to do is basically bring in more enforcement and more compliance to the table and basically hopefully catch up to speed. So how will they use this money? Well, if you want to see how they will use the money, most likely we're going to be seeing about $3 billion going for taxpayer services, $45 billion going for enforcement, $25 billion for operation support, and $4 billion for business system modernization. How exactly that's all going to pan out, we will see, because the IRS has always surprised us in how they do things. They implement laws and they implement changes, and then they go back and modify it last minute. I've seen it time and time again. So exactly how everything's going to pan out, we do not know. But what we can say is that, will the audits increase? Yes. And in the words of Treasury Secretary Yellen, he has promised that the IRS audit rates will remain at historical levels for taxpayers earning less than $400,000 per year. So historical levels is an ambiguous term. Does it encompass the audit levels of the past decade or so? In 2010, audit rates were at 1% compared with the current historic lows of about 0.25%. Thus, audits for those earning less than $400,000 could increase fourfold, albeit from a very low level. In any event, audit rates will definitely rise for taxpayers earning more than $400,000 per year. This may take some time. The investment in the IRS is expected to raise some $124 billion over the next 10 years, which makes perfect sense because they created so many complex rules, and it's just basically becomes self-enforcement. And what I want to speak to you guys today about, if you're a business owner and you're an S corporate owner, then that's most likely where we're going to see an increase in enforcement, because as an S corp owner, you're supposed to pay yourself a reasonable salary. And unfortunately, what happens is that that's basically putting in regulation into the taxpayers' hands, and hence they can greatly understate their payroll and to pull out money as a distribution and basically skip on payroll taxes, which are FICA, or what we know as Social Security and Medicare taxes, which are required, and they're needed for funding Social Security and Medicare, but for the taxpayer, for the owners of the S corp as well, it also becomes, for 50% of that, it becomes a deduction for the business. Now, I'm not going to get into the mechanics. There's a video right here that you guys can listen to as far as the reasonable compensation is concerned, and you can take it from there. As far as the likeliness of S corporations now being audited for what we call a salary audit, we don't exactly know how it's going to pan out, because historically we've never actually seen a salary audit. We help all our clients by guiding them towards making the right salary, the right compensation that they should be paying themselves. We cannot set that for them. We guide them, either they're using reasonable compensation reports, or we're looking at many different facets, but ultimately the client is responsible for setting their own salary. We cannot get into those details because we do not know what are the responsibilities that they entail, and we don't understand their industry to that minute detail, and that's really up to them to decide. We just give them all the tools they need to make sure that they're doing the right amount of reasonable salary. So we definitely expect for this area to be definitely looked into. Exactly how that's going to play out, it's already, like I said, we don't know when or how, but most likely we're going to see an increase in those audits. because that's definitely a place where a lot of tax is being circumvented and avoided. There are definitely other areas that we're going to see an increase in audit and regulation, and most likely that's also going to hit the business partnerships. If you're an LLC and your tax is a partnership, we're probably going to see an increase in audits there as well. That's of no surprise because there's definitely a lot of areas there that need improvement as far as regulation is concerned, and offshore accounts are always on the table for looking very closely at some of that reporting, and that's also informational reporting. There is going to be a huge change in foreign reporting. It obviously will not impact many individuals, but if you do have foreign investments or foreign bank accounts or foreign trusts or businesses, the reporting is definitely going to get beefed up, and they're giving us less time to process some of that information. This is also, by the way, it's really not an IRS enforcement. Anything that deals with foreign is basically Financial Crimes and Enforcement Unit, or what we call FinCEN for short. And yes, it can definitely go criminal by not reporting your foreign accounting, I'd rather say foreign investments. That is one of those things that really is not an IRS form. It's a FinCEN form, forms that are being complied to, but it's all tied into the filing. So you can sometimes, depending on which form we're dealing with, you can file it separately. You can file it with your return. So that's basically what we're looking at. Obviously, the cryptocurrency is another thing where they're going to be closely looking at cryptocurrencies more. That's been growing as that technology's evolved. And I think that's really the big ticket items. I definitely would like to dive in a little bit more into this. Unfortunately, time is of the essence, and I think everybody gets the gist that, yes, they're beefing up the IRS by placing $80 billion in their hands to be able to catch up and enforce the complexities that they've manifested for us taxpayers. All right, guys. Well, if you ever have a need for a great tax accounting team, remember, Framing CPA has our motto, always, your success is our success all day, every day. Thank you. Speak again soon. Bye.